So other than the S&P 500, I've made the most money on GameStop. And in today's video, I want to just explain to you guys what's going on with GameStop, give you guys an overview if you haven't been following already. Let's just dive straight into it. So here is a video of me basically live streaming while I was up 3,000% on GameStop. These contracts for many people ended up going 5,000-6,000%. This was back in May. And thankfully, it worked out really, really well, clearly. I was also involved in the initial run-up back in 2021, and then again in May of 2021 as well. And then basically, I've just been following it this entire time, really. So now, it just got halted today. Why, you may ask? Well, Roaring Kitty, who was the person who initially pointed out the flaws in the way GameStop was being priced and the way that it was being extremely shorted, right? Roaring Kitty was streaming about GameStop every day for a very, very long time. And back in 2020, that's when Elon Musk, that's when, not Vivek, the other Indian guy, he also got involved in GameStop. It became a very, very large meme stock back in 2020. And Roaring Kitty was the head of this move. Okay? So he has not tweeted since September. This was a few months after the initial run-up in May occurred. Okay? He has not tweeted since September, and his tweets are often very cryptic. For example, this is a tweet. He's throwing a dog away. This signified he was actually a shareholder in Chewy. Chewy is a pet food company, right? He was throwing a dog away. This essentially meant that he was not holding Chewy anymore, right? So he's very cryptic in the way that he posts on social media. So this was the first post that just occurred 2 hours ago. And essentially, this is a Times Magazine article where he edited out the time here. So this 1 minute and 9 seconds can mean two different things. 1 minute and 9 seconds can mean 69 seconds. And this is 420. So a meme online is basically 69 420 is like 420 is basically, National Marijuana Day, and 69 is 69. That's literally what is implied over here. So 69 420 is a well-known meme on social media. So this is also what he's known for. So what's interesting though is this screenshot is the Times Magazine article from 2006, and the person of the year in 2006 was you. So you was the official choice for Times Person of the Year. The magazine was set to recognize the millions of people who anonymously contribute user-generated content to websites such as YouTube, MySpace, Facebook, and the multitudes of other websites featuring user contribution. So this had a lot to do with a movement. Back in 2006, it was the first few years, essentially, after the internet really, really stabilized and became like a part of everyone's life. And if you guys remember, YouTube and everything was also very, very early at that point. But this online presence was very early at that point. And this was essentially meaning community. So you are the people of the year, essentially. So community, community, community. And what is the main driving force behind GameStop's rise is the community. It's the fact that people are trying to go against the large hedge funds that are continuing to manipulate the stock price down using shorts, using essentially shorting the market, right, in a way that should not really occur. So this is one of the things here, okay? So the other thing that I want to show you guys here is I asked ChatGPT how many days, so assuming January 9th is a very important day, okay? I basically wanted to verify what I saw on Reddit. So I asked ChatGPT how many days until January 9th, 2025, including today. So this gave back 35 days. Okay, so now why is 35 important here? Okay, so according to SEC Rule 204 of Regulation Show, basically, if the closeout date, all right, to make this very, very simple, the T, so T plus 35, okay? So the T means the date that you made the trade. Plus 35 is 35 calendar dates to regulate the trade properly, okay? So what does that essentially mean? So I asked ChatGPT for the context of T35 for options. So what it gave was regulatory closeout rules for failure to deliver, FTDs. What it means, if a seller of an options contract, especially those tied to a stock, fails to deliver the underlying shares when required, for example, after an options exercise or assignment, the regulatory timeline to resolve this issue includes a T plus 35 date. So this ensures the market is fair, blah, blah, blah. Naked short selling and fails to deliver. Naked short selling is one of the main reasons why GameStop, the price is so low, is because they have created ways to short GameStop using various different ETFs, whether those are ETFs that have baskets of retail related stocks, retail sector ETFs, creating ways to short multiple ways. So it's like they also, you know, if you guys understand, there's like 2x Tesla bull or 2x Tesla short stocks, right? Those are also other ways to synthetically move the price. But because GameStop specifically is also very, very manipulated, these synthetic like Apple 2x or MSTR 2x things, those don't affect the stock as much as what is currently going on with GameStop. So GameStop currently, there's probably, the last time I looked at it, there was like 900 or 1,000% of outstanding shares are short GameStop. How is that possible? So it's because of these ways to manipulate the short, and it's the ways to manipulate and create new shares. So now how does this apply? If an options market maker writes a contract and does not deliver the required shares due to insufficient shares available, T plus 35 can mark the deadline of which they must resolve. So what this means is they essentially, if they don't buy out the shares within the 35 days, they have to buy them all after the 35-day mark. And this causes the stock price to jump generally, okay? So that's why it's actually pretty interesting. This could actually just mean nothing, but it's just so happens that January 9th just so happens to be calendar day, 35 calendar days away. And it does not apply to business days. It applies to calendar days. So that's pretty interesting. Yeah, so with that being said, we just have to monitor essentially whenever he speaks or whenever he tweets after a long hiatus, stock price jumps. And we just have to monitor what the next steps are for what he says, whether he goes live on a live stream, whether he posts on Reddit, whether he shares his position, because recently during May, he was up $600 million. He screenshot a $600 million position on GameStop with calls and shares. So definitely look to see if he does that as well on Reddit. And let me show you guys the Chamat, not Vivek. It was Chamat. So this subreddit, Reddit Super Stunk, is where he will most likely post. And yeah, with that being said, you know, I hope this gives you guys a good overview. And really just currently we're just holding on to various different 2025, 2026, and 2027 calls. And we're just going to let it play out. I was expecting a run-up in January. It just so happens that he started tweeting a bit earlier. So let's see if, he can keep the price up or what ends up happening into January. But so far, so good. First tweet in a couple of months. It's pretty good, okay? It's a good night so far. Just to really drive things home here on GameStop, this is the weekly chart. The 50 simple moving average just crossed above the 100 simple moving average as well, which is generally very, very bullish also. And we just had 5 straight green weeks in a row, which is normally very, very bullish. So this week is most likely going to be 6, but regardless, it's important not to just throw your entire portfolio into anything. Of course, I'm not your financial advisor. This is not financial advice. It's important to not gamble in the short term. Rather, it's more important to hold for the long haul. And that's what, we should really be doing. So there's that. As more things occur on GameStop, don't be surprised. I will jot them down and explain them to you guys, all right? So first and foremost, I want to first start off by looking at the VIX. So the VIX is very important because it has an inverse relationship to the market generally, all right? So if the VIX is rising, generally that is bearish for the overall market. And the VIX is starting to bounce a bit. It held this level of support at 13. It's starting to show some bullishness. There's a lot of call buyers coming into the VIX. There's a lot of put buyers coming into the overall market, most likely as hedges. And the VIX is starting to curl upwards. It does seem like the VIX can easily go to at least $15. Of course, nothing is guaranteed, but the $14.50, $15 mark is definitely on the table for the VIX if we can hold this 13. I mean, just the setup it's there for a bounce. And the setup is also there for a pullback in the overall market. Just a bit of a pullback. Obviously, this is not an automatic reason to just aggressively go short. That's definitely not what I'm saying. But it's starting to get there. This is definitely the overall market is starting to show cracks. The ES is clearly showing some weakness. Not really, but the NASDAQ. Well, basically, the ES and the NASDAQ are showing red candles. And the Russell is clearly showing weakness, okay? Now, the ES, the S&P 500, and the NASDAQ primarily move because of the large tech stocks. And the large tech stocks, to be bearish on the large tech stocks, we essentially need to see if they are very overcooked to the upside. So let's go ahead and take a look at the large tech stocks to see how far up they are and whether it makes sense to start leaning bearish if there are bearish setups in the tech stocks, okay? So number one, let's look at the biggest winners so far. All right, so Meta, clear-cut big red candle. We haven't really closed below 605 or 600, so this is not an automatic bearish situation, but this is the first step to a bit of a reversal if we were going to have one, okay? Netflix as well. Netflix, this is a doji candle at the highs. Definitely not the most bullish situation after really just grinding up. This is definitely not the most bullish situation on Netflix, okay? Tesla had a very monstrous bullish day, okay? Apple, again, Apple, like I was saying, this 243, 244 level was going to definitely be a level where I wanted to see some weakness out of Apple, and clearly we're starting to get that. We got a doji candle yesterday, and we got a red candle today. So it's going to be interesting to see what ends up happening on Apple. Google, literally, I was saying 177, 178 would be a really good opportunity to go short on Google. And so happens we had a high of 177.70. So we got to pull back on Google over here. Spectacular, right? This is a bear flag. This was a bear flag that broke down lower and it turned into a larger bear flag. And clearly, this is the first signs of a move lower on Google. Okay, pragmatically speaking, Microsoft, not pragmatic. Still showing a lot of strength. Not an automatic time to just go short, but this is overcooked. This is definitely overcooked. Amazon, not as overcooked as Microsoft, but essentially, this is where you would want to start not going long. Does that make sense? When you essentially don't want to go long on a stock is when you should start leaning short. Does that make sense? When you should start looking towards going short soon. Amazon, Microsoft, Tesla, overcooked. Starting to get overcooked. Netflix, Meta, Apple, starting to show some weakness. Okay, that's what we see so far. Right? Now let's take a look at NVIDIA and AMD. Once again, NVIDIA, just very simple. I was saying 145, 146 would be an area where we would get a bit of some weakness, probably go short over here. This would be the better opportunity to go short. And if you guys remember, a few days ago, I was saying while we were trending on this trend line here on NVIDIA, I was saying it was not a good short. I specifically said I would much rather be going short up here. And this is just so happens to be where the market is showing some weakness. There's that. And let's take a look at AMD. AMD showing a bit of weakness. Pragmatically, this is starting to, these tech stocks are really not showing as much strength. There's not as much room to go to the upside. Does that make sense? So if there's not as much room to go to the upside, what does that logically tell you? It means, number one, it's not a good opportunity to go long. Number two, it's definitely starting to become a better opportunity to look for shorts. And with that being said, let's see what ends up happening. GameStop is definitely going to be a really fun stock to continue watching. A lot of moves on GameStop tend to happen in the pre-market and in the after hours. So it's going to be interesting to see whether we gap up and what ends up happening. But I'm excited. And yeah, should be fun. But with that being said, tech stocks are starting to get a bit too much love. So we have to be very wary about adding aggressively to longs up here. And I don't want to start chasing longs. I was wrong about going short 2 days ago when we held overnight. Now things are starting to get a little bit better to go short. So we're going to have to see if the market ends up green tomorrow. Most likely I'm going to enter into something. I'll keep you guys updated in the Discord. All right, but I hope you guys enjoyed today's video. It was it's pretty fun for me to explain this stuff, and I hope you guys enjoyed. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.